Let me start with something people rarely admit. Most traders don't lose because the market is hard. Most lose because the lifestyle required to execute certain strategies is incompatible with their reality. And I say this from experience. Day trading, whether that's on the 1 minute, 5 minute, 15-minute chart, can actually work. There are real edges there. But here is the truth that nobody wants to hear. Day trading only works for people who can monitor charts for hours every single day without interruption, without emotional deviations, and without missing a single opportunity. If that sounds like an algorithm, then you're not mistaken, because the math behind any short-term system demands this. You must take every qualifying step, you must execute with tight timing, you must accept many small losses, you must stay mentally sharp for hours, you must not miss any winners that make the system profitable. But the average person, someone with a job, with responsibility, kids, stress, meetings, phone calls, that lives in an environment that cannot produce the consistency the system needs. It's like designing a robotic arm that requires microseconds of timing and then letting it operate on a table that's constantly shaking. The tool is fine, the strategy is fine, but the environment makes precision impossible. The day trader's edge depends on executing on every opportunity, and missing just 2 or 3 critical traits can distort the entire statistical outcome of the system. So what is the alternative then? To only focus on few quality setups? Well, in those cases, you have to spend 7 to 8 hours on the charts. And probabilities like this may only come once a week, maybe once a month. And then you have to realize, I've spent so many hours on the charts. What is my return on investment? How many hours I've spent and how much money I've made? And this is why most people lose, not because day trading doesn't work, but because they cannot behave like the person the system requires them to be. I couldn't. Most people can't. And that's okay. But you must acknowledge this. Here is something that took me years to understand. An edge is not always made of the trades you take. An edge is also made of the trades you don't miss. That sounds counterintuitive, so let me explain. Every strategy has a distribution of winners, distribution of losers, and a handful of rare trades that produce most of the profit. So if you miss those rare winners because you were eating lunch, you were in a meeting, you got on a call, you put a kid down to sleep, you answered an email, and simply you are not watching the charts, then your system can collapse. Most traders think that they lose because of bad entries, bad stop losses, or emotion. And that's not really the main reason. Most traders lose because they inconsistently participate in the market. From a psychological perspective, this creates a loop. You take the losers, you miss the winners, your win rate gets distorted, you doubt your system, you modify it, you break it, and then you start over. You chase a new system, and the cycle repeats. This helped me realize a painful truth. If I cannot reliably take every valid trade in my system, then I don't truly have that system. And as someone with a job, meetings, child responsibilities, and a full life, I simply wasn't able to take all the opportunities in a fast-paced system that's required. That meant I wasn't trading the real statistical edge. I was trading a distorted version of it. And that was never going to work. And it did not. Eventually, what I did is I shifted completely. I chose a different approach, not because it's superior, but because it supported my reality of life. I slowed down, I zoomed out, and I began trading time frames where the market gave me some tolerance. Higher time frames don't require perfect timing. They don't require staring at the charts all day. They don't punish you for missing a candle. They give you space to think, to breathe, to analyze, and to execute calmly. But the real breakthrough for me was discovering two natural edges. Edge number one was the stock market drifts higher over time. This is not my opinion. It's math, it's mechanics, it's the design. Indexes are constructed to grow. Weak companies get removed, stronger ones get added, earnings grow, innovation compounds, population expands, demand increases, economy strength upward. This means that even if your timing isn't perfect, the long-term direction is typically upward. Being early isn't always being wrong. It's often just being early. This is powerful because it gives you tolerance, a margin for error, and your system doesn't need a microsecond precision. It needs patience. This worked for me because it matched my life. I could participate without feeling rushed. My edge number two was buying at a discount. It improves the probabilities. So let me be clear. This works for me. You must verify it for yourself. Never adapt anybody's strategy blindly, not even mine. Because here's the logic that resonated with me. If the market tends to drift higher over time, then buying on a pullback into a demand zone after a discount in an uptrend, that stacks the probabilities further in your favor, which means that could the price go lower? Yes, probably, absolutely. But the probability of the price actually going higher when buying at a discount in a long-term uptrend, it's simply greater than buying at the top when everything is already euphoric. That combination of structural upward drift plus buying when the market has pulled back a little bit is the only approach I've personally been able to execute consistently. Not because it's magical, not because it guarantees profits, but because it fits my psychology, my schedule, my responsibility, and my personality. And on top of it, my tolerance for uncertainty. This is why slowing down works for me. It gives me the chance to take every trade my system produces because those trades happen over days or weeks, not over minutes. It lets the edge actually manifest itself instead of being sabotaged by missed opportunities. And it aligns with the reality of the life I'm living. So this is my example. It's not a universal truth, and you really must verify it for yourself. In closing, most people lose in trading not because they're incapable, but because they're trying to run systems that demand perfect behavior inside their imperfect lives. If there's anything to take from this experience, it's this: slow down. Choose a time frame that forgives human imperfection. Use a system that allows you to participate consistently. Verify everything for yourself and build a trading approach that matches your actual life, not a fantasy version of it. And this is key, not a fantasy version of it. This is what worked for me, and maybe it'll help you shape your own journey. Thank you for listening, and until next time.